Chapter 1. Becoming a Millionaire, Mindset and Attitudes. Everybody has thought about what it is to be a millionaire and rich. For those who might be interested, being a millionaire and rich means professing to be one without really being one. This being the situation, the financial punishments required will defer your making of wealth after that. Anybody can turn into a millionaire when they have the right mindset or the longing to change theirs. Many people aspire to become wealthy or millionaires one day. Everyone has the mindset of a millionaire, regardless of their wealth or level of income. How we think about things and situations might be characterized by our mindset. Our beliefs, in turn, influence our behavior and way of thinking. If you swiftly accumulate wealth, you will sooner or later lose it again if you don't have the appropriate mindset, or if you don't ever reach financial prosperity. The 7 typical millionaire mindsets are required for everyone to achieve financial success. Millionaires covet mission or purpose. Some people have a powerful inner drive to do something. They are doing something that truly benefits and adds value to other people. These people are nearly fixated on their goals. They are not deterred by failures, anxieties, or the opinions of those around them who claim that the project is impossible or would not accomplish anything else. These people genuinely want to change the world to benefit humanity, whereas most people have jobs or careers. Without providing any benefits to others, someone who declares they desire to become wealthy will not be successful in their endeavors because it is only a personal endeavor and not a purpose. Millionaires prioritize their goals. Few people talk only about what they don't want. While luxury dining out or an expensive vacation is not an issue, they don't want the current politicians, their current boss, etc. They also don't want to market themselves, display themselves, or spend a few dollars on a book or course that could advance their careers. These people frequently complain about how terrible their former relationships or formative years were. Unfortunately, explaining what you don't want won't always result in your desired life. Most millionaires are preoccupied with their goals. In many cases, they are even certain of their goals. They have a goal and link their ideas and actions with this aim, talking more about the future than the past. Though the precise route is frequently unclear, you are aware of your destination and will devise a plan to reach it. Millionaires are paid for performance. Most employees are paid according to their time on a task in today's workplace. Additionally, there are phrases like, "But it has to cost at least XY because that requires so much working time," a few times. However, that is the wrong approach because a consumer only pays for the outcome and perceived value. He doesn't care how long it takes to make it in the end. Millionaires think similarly because they measure success instead of effort put into work. This key distinction pertains to the distinction between quantity and quality. Millionaires are thrifty. The media frequently portrays wealthy people as wasting money at parties and ostentatious residences. On the one hand, we don't know if the people in the pictures paid cash. But on the other hand, these are pretty outliers. Most affluent individuals follow one fundamental principle: spend less than you make. The additional money obtained is then put toward purchasing assets to produce passive income. Millionaires prioritize making money over saving. To consistently generate surpluses month after month, it's crucial to remember the 4th principle that was just presented. However, it is even more crucial for millionaires to look for new revenue streams continually. Most people with limited funds frequently have thoughts like, "I'd want to take this trip, and I'd also like to have this automobile, but I can't afford it." On the other hand, financially successful people consider how they can make the most money to fulfill their desires. Additionally, It is better to try to raise income than to limit oneself by conserving, psychologically speaking, severely. Don't only save, look for more money. Long-term adherence to this way of life causes the lack of mentality to become deeply ingrained in the subconscious, which is a significant mental barrier to achieving financial success. Millionaires view challenges as chances. The majority of individuals view issues as obstacles and give up when they appear to be too great. Every issue is viewed as a genuine opportunity by millionaires. They view difficulties as an opportunity to learn from them, act differently, and do better the next time, rather than as something negative. Successful people gain new skills by solving issues because they frequently have to do so. Additionally, problem solvers, frequently quite well-compensated individuals, are always needed in society. You shouldn't be a complainer if you want to be financially successful. Instead, you should be someone who finds solutions to other people's issues. Millionaires never stop learning. The idea that learning stops after school, training, or studies is frequently held. But if one wants to flourish financially, this is the wrong outlook. Millionaires never stop learning new things and continuing their education. Millionaires have a good outlook on the future and a favorable relationship with money. Many people don't worry much or at all, or worry more about the future. Another sizable segment is primarily focused on unfortunate incidents, which are likewise meticulously covered by the media. Financially successful people tend to be positive when looking ahead. You have plans and believe they will materialize. They consequently don't fear the future and instead look forward to it with hope. And everything is created by our subconscious according to our expectations. It's like a prophecy that comes true. Because neither luck nor uncontrollable external factors indeed contribute to wealth. When you adopt the proper mindset and, more importantly, actually put it into practice, you can become a millionaire. Becoming a millionaire, having a goal and achieving them. What is the connection between having a goal and becoming a millionaire? Youngsters, we have dreams. Presently, realize that fantasy can materialize, given that we work everything out. This is categorically the very thing that a focal point does. It permits you to go from a dream to the real world. In this way, you should have a particular goal as a top priority, to turn into a millionaire. Your goal will lead you to do what is necessary and better manage your various resources. What is your inspiration? Everybody has one. Nonetheless, do you know what makes the difference between the consequences of two individuals with a similar objective? Well, that's what motivates them to want to accomplish this result. You should have a true inspiration. What is a life goal? Goals in life are wishes and dreams for what's to come. They are essential for a cheerful, self-dedicated life. Because only those who know where they want to go will be inspired, can grow further, and impact on their fulfillment. These objectives are the wellspring of good confidence. Some might want to take on an administrative position or find a startup job. Others might want to circumnavigate the world. Is your objective the driver's permit? Could it be said that you are holding back nothing? Then, at that point, increase your determination. Is your goal an expert reorientation? Then you complete further preparation. The more your objectives are planned unequivocally, the sooner you can make a plan. Why sets a goal? Setting goals is significant for two primary reasons: assuming control over your life and accomplishing more. If a person doesn't set a goal in life, she will wander aimlessly through life. This could be temporary unwinding. You don't need to arrive at hard conclusions about your course and can accept things. Sadly, it's likewise very unsafe over the long haul. Assuming you later understand that you would prefer to be elsewhere, a course adjustment can be substantially more troublesome than if you had controlled toward this path from the beginning. That is, if you had set a goal right from the start. Having a goal in mind motivates you to do more for it. Setting goals daily, weekly, and over the long haul motivates you. It is entirely expected to surrender to dormancy and be enticed by lingering. Assuming you have put forth objectives for the finish of an undertaking, you will more often than not defer its execution because, if not, you will postpone the next one. You have different undertakings to do, so you should complete the one you're doing. As you complete them, a feeling of satisfaction may likewise show up and consequently increase your motivation, leading you to achieve more goals. Achieving your goals by renewing your dreams. Renewing your dreams is one of the most significant goals you can have because your considerations set the bearing for each day and everything in your life. Our considerations make our sentiments, which impact our activities. Also, what we decide to do assembles propensities that can affect us for our lifetime. By renewing your dreams every morning, you remember a particular goal you have set to achieve, maybe that day or that year, and it helps you work hard towards achieving it. There are ways in which you can achieve this goal. Accomplish your dreams by setting your time rightly. Using time productively is a subject that influences everybody. We as a whole, regardless, should figure out how to more likely deal with our time and our requirements if we need to be successful throughout everyday life and accomplish our dreams. Create a plan by segmenting your goals into steps. Make an arrangement by separating your objective into steps. Identifying your goals is a vital step. Major goals can be challenging to manage, and you might feel like you don't know how to achieve them. Tragically, this is where many individuals surrender. Since it has become obvious where you need to go, separate your objective into pieces. Assuming that you want to have a fruitful business in 2 years, where should you be in 1 year? In a half year? 1 week from now? Make an arrangement that separates your objective into little advances. Record each progression and set a cutoff time for its finish. This way you are not overpowered by the mountain you are climbing. You are simply positioned carefully. Each day you get up, you know what you want to do that day and why. Utilize Evernote's day-to-day planner and the week-after-week planner layouts to break your goals into sensible lumps. Make a passage for every achievement you want to finish, and remember to reimburse yourself for the success you made on your route. Be conscious of challenges that could come up. The way to the most difficult goals is flung with impediments that will challenge you. Investigate the different obstructions you might experience in this way. To begin with, having an idea of the impediments you could experience will assist you in making an arrangement to survive or even stay away from them. Thinking about a fallback for the unavoidable difficulty that will come in your direction will make it simpler to refocus. This will assist you in continuing to gain ground in any event when you go over a difficulty. Not all obstructions can be arranged. In any case, contemplating it will give you certainty and purpose your choice, making it simpler in case of unforeseen event. Reward yourself with every little success. Whenever you set goals, it's essential to consider compensating yourself as you accomplish them. You anticipate some return for your work. If you implement a personal reward, you'll find a reason to keep going. The significance of the prize isn't straightforwardly related to the inspiration. Indeed, even the smallest of rewards can encourage you to accomplish more. By setting up an award framework for yourself, you are utilizing your dopamine for your potential benefit. Recall that each progression, even the smallest, is a triumph. Keep an eye on yourself and don't surrender. By renewing your dreams every morning with inspiration and steadiness, You will want to pursue your goals, even the ones that seem unattainable. You are more grounded than you think. However, if your goal is not based on strong motivation, you risk surrendering at the smallest obstruction. Yet, your inspiration is the main impetus that will carry your desire to become a millionaire and rich to its realization. So give your desire sound motivation to materialize. Accordingly, it will lead you to make moves that have positive outcomes. Make decisions and make choices. This step leads you to make decisions among a few alternatives. Your choices are the goals you set for your objectives and want to become a millionaire. For instance, you can decide not to search for day-to-day work, not to work for your entire life, not to depend on your work, and so on. In actuality, you can decide to be free, to have command throughout your time and your life, to have the option to do what you like, and so forth. Your choices and decisions will push you to make substantial moves to accomplish your objective. In any case, realize what is happening is the after effect of the relative multitude of decisions you have needed to make all through your life. If you want to improve your day-to-day or living conditions, begin by making good decisions. Generally, individuals who are millionaires or rich surround themselves with positive and effective individuals. So, to find success, you need to know how to eliminate yourself from specific destructive connections. These connections can compromise your companions, associates, family, or family members who won't grasp your decisions and choices. The thought isn't to leave your companions for those with a higher social status out of sheer interest. In actuality, you should know how to choose your companions and encircle yourself with individuals who have similar targets as you and who are equipped to bring you more. So, be particular. Developing an action plan. When someone becomes a millionaire, many are interested in the results rather than the strategy. Many are keen on the outcomes instead of the methodology they set up to get there. The people who become millionaires do so through the systems they set up to accomplish it. This process is the action plan you create and the methodologies you set up. You want to foster an arrangement and set up methodologies. Turning into a millionaire and rich go through the improvement of an arrangement. On the off chance that you don't have the foggiest idea where you're going, how might you realize you've shown up? Turning into a millionaire or rich requires having a guide. Your action plan directs the activities you will initiate, and the results of those activities make up your prosperity. What is an action plan? The action plan is the reference report for every one of the employees of a business, which changes the reflections set out in the strategic plan into the concrete and functional implementation of the decisions. It is the intermediary between analysis and action. The action plan should be a detailed and clear report that will be utilized to set up the resources to accomplish its objectives. This internal document concerns all divisions in that it identifies a methodology that everybody must be able to adapt to. Why make an action plan? This plan is utilized to direct the development of your business perpetually. Also, engage workers, delegate, to expect hindrances, to guarantee better control of business advancement. The action plan amplifies the rearrangement of both inside and external resources and consequently works with independent direction. Essentially, it's very simple. The action plan makes you move quickly towards progress, make the unexpected advantageous for you, saves you, leaves you with true serenity. The action plan advances both human and monetary assets, gives a worldwide vision of the organization which makes it possible to forget nothing, opens up a space for results-situated analysis, explains the means utilized and for what possibilities, permits backup arrangements and reflection on the results, is a consistent perspective to involve and motivate the team. How to make an action plan and what are the steps? The action plan essentially comes after the strategic plan. There is no single distinct method for making an action plan, but here are a few fundamental stages. 1. Determine your goals. Clear objectives are necessary for the action plan. Start with the broadest or most detailed form. The objectives will give the plan purpose and direction. They will help you to remember the ideal alignment and the ideal end setting. 1. Specify the steps to take. Determine the various activities to be performed to accomplish the objectives in this step, which is concerned with the action portion of the plan. We advise ordering by importance. 2. Let team participate from inception. The effectiveness of the action plan depends on the engagement of your team. The action plan and other strategic plan components must be developed with the team integrated from the start. Strategic planning managers should have a brainstorming session with their teams to choose which projects and actions to include in the action plan and how to carry them out. The goal is to take a lot of strong ideas, narrow them down to the most significant ones, create a shortlist to examine them in greater detail, and then choose a few important actions that have the best chance of assisting the organization in achieving its strategic goals and the desired future state. The senior business advisor emphasizes that the goal is not to create a comprehensive list of everything that needs to be done. Instead, it involves prioritizing the actions to bridge the gap between the current condition and the intended future state. By incorporating your team, you can make sure that the best suggestions are considered and that the staff will support their implementation. Frontline employees occasionally come up with the best planning and implementation ideas. If as many critical employees as possible are participating, you'll obtain stronger team buy-in. 3. List the substantial details of each action. The action plan is normally introduced in a one-page spreadsheet that lists initiatives by capability. Measurements can be basic one-time projects. For example, recruiting a renewed individual. Repeating measurements, for example, laying out a month-to-month survey of actual expenses versus assessed costs. Or bigger ventures, for instance, the site's transformation into an online business website. For each action, the spreadsheet presents a key presentation pointer, the names of the people mindful or engaged with the initiative, and a plan for completion. The spreadsheet can likewise assign a priority to the initiative, low, medium, or high. More descriptions and portrayals of the activities are typically tracked down somewhere else in the strategic plan. The action plan is a simple-to-peruse outline of these initiatives that your team can use as a fast reference sheet to follow progress. 4. Set a timeline. Action plans often span a year. Each month's duties for each initiative are listed in a column on the spreadsheet devoted to that month. For each quarter of the other years of the strategic plan, additional columns are added. Strategic plans generally cover 2 or 3 years. 5. Assign resources. Many action plans fail because sufficient human and monetary assets are not committed to completing the initiatives. Make certain to dispense adequate time, backing, preparation, and monetary assets. The activity plan ought to demonstrate staff responsibilities regarding every initiative. Endorsement. The individual directing the action, generally the team leader. Consultation. The individual who ought to be counseled during the execution. For instance, the money director might be expected to give financial information. Preparation. the individual who ought to be informed regarding progress or decisions, like a ranking director or the top of an impacted division. 6. Begin monitoring an appraisal process. The action plan should determine measures to screen implementation. These can be achievements like following through with a responsibility, or quantifiable measurements like income, edge, or portion of the overall industry. Additionally, conclude how you will follow the action to guarantee the achievements are accomplished. This might incorporate inward reports and customary gatherings to talk about progress. Meetings with more inside and out surveys quarterly. Meetings permit you to recognize and reimburse staff members' victories, distinguish where you've fallen behind, and determine corrective action if needed. 7. Communicate your plan. Make sure everyone knows the action plan and the part they will play in putting it into action. To the workforce and organization, explain the advantages. The action plan is the tactical element of your overall business strategy, which attempts to boost business performance, and your staff must understand this. The team must be shown the action plan by management, and they must be able to connect the dots. People could resist change, but you must convince them that it's essential for the company's existence and growth. They must know that the plan will unfold gradually and won't involve total disruption. You must address people's concerns and reassure them about the changes. 8. Maintain your plan. It must be adaptable and agile in order to handle implementation changes and changes in the internal and external environment. Your metrics, priorities, and even overarching goals may need to be changed. Ask your staff for input regularly. The senior business advisor asserts that no strategy can withstand the first encounter with reality. Don't keep working on a plan that circumstances have derailed. Start debating with your team how to create a new action plan for the following year that builds on what you've learned as the year concludes. Discussing it frequently is an excellent way to keep the action plan fresh. As we saw earlier, the existence you have now is formed by your decisions. Be that as it may, where does the decision come from? Our conviction systems and mindset, our convictions, and our approach to seeing things. You want to examine your conviction frameworks and mindset to change your decisions. Not everyone has a similar understanding of money and wealth. For instance, assuming that you accept that you are commendable and fit to turn into a millionaire, you will want to accomplish it. Then again, assuming you think that you are unworthy and unequipped for having such a lot of cash, that you need to work for another person for your entire life, that was having a few kinds of revenue is preposterous, etc. Chances are you won't. To change your limited thoughts and mindset about money and wealth, begin thinking unexpectedly. To have various contemplations, you want to track down the information, resources, and individuals who share the same convictions that you look to have. You could track them in books, recordings, digital broadcasts, phases of preparation or gatherings, joining gatherings, and so forth. Taking action. Many individuals don't have the persistence to fabricate and grow a business for quite a long time. Notwithstanding, they have the persistence to go to work for another person for quite a long time. To have cash, you should have a good or service to sell. If not, nobody will need to pay you. You should bring something to the table to bring in cash. Thus, if you need to become a millionaire, you should have the option to serve many individuals. What good or service do you have to offer for $1 million? It is time to leave the status of the consumer to that of producer, creator, inventor, etc. What administrations do individuals still need? If you can provide administration, that is. you will end up being a millionaire and rich without any problems. For instance, if you need to get rich, help out 1 million individuals in one of the accompanying regions: immovable, clothing, education, health, entertainment, sport, welfare, technology, etc. But mainly in this book, we will be focusing on investment in natural resources, such as mineral resources. For example, gold, diamond, silver, tin, gas, oil, and other natural minerals, which will liberate us more to become a millionaire quicker and easier. Chapter 2: Investing in Business. Investing in a business means investing your money to encourage small and medium enterprises in their development and derive substantial gains. Subsequently, action isn't inconsequential and likewise presents the risk of losing the capital you will initially have invested. It is, in this way, important as a matter of some importance to realize how putting resources into a company or business functions. Since there are a few kinds of investment in a company, acquiring securities is recorded by participating in a mutual risk investment fund for unlisted organizations through financing participatory or crowdfunding. Each enjoys benefits and disservices, which you should gauge as indicated by your speculation objectives. What is the desired objective? You should be aware that there are as many goals desired as investments. However, some goals overlap or are the same. Desiring to make a long-term investment, supporting small and medium enterprises in their nation or region, maximizing their taxation, or even being opposed to market finance. Still, before thinking about investing in a business or buying stock in a company, you have to know why you want to invest. The first question will result from a chain of answers: the allocated amount, the expected profitability, the investment's time horizon. Investing in a business isn't just about supporting it, it is to expect a profit from the investment. To do this, you should consequently learn about the project you are funding, its core business, its market, its short, medium, long-term prospects, its financial model, its economic model, its accounting, its estimated budget, etc. This need is additionally equal for the business visionary and the investor. The entrepreneur needs funds to maintain his business, invest, and develop. In this manner, it should be convincing to possible investors and, to do so, give them assurances of profitability and market share. The figures should be exact on both sides: the amount needed, the expected profitability, future growth rates. The value of this type of information is enhanced by the fact that it enables you to assess the level of risk you have taken and see how you have contributed to the construction or even served as the activity's much-needed catalyst. How much to invest? The issue of how much money should be invested then inevitably arises. It goes without saying that while making an investment decision, you will act following the assets you have available to you rather than those you do not. The item you plan to place shouldn't put you in a precarious position. If you are considering how to invest well in a business, know that putting away just money isn't enough. Although cash is the most significant, you also have the choice of contributing anything more to the business needs. Notwithstanding, the real estate and mineral resources business, gold, diamond, crude oil, iron, etc., requires a commitment to industrial machinery. This represents a volume of shares, guaranteeing you profits as fair as though you had contributed a silver capital. How to turn into an investor. When you decide to invest money in an organization on the stock market or any business, you will become an investor. It is also the most well-known category of interest in the world. business investing definition, you purchase shares or invest in the capital of organizations through, specifically, speculation organizations with variable capital, which, as a holder of shares, awards you this investor status. You gain the option to talk or try and vote at comprehensive gatherings, a right to review or choice on the organization's existence, and the option to get profits, which will correspond to the number of shares possessed. Risk to avoid. Remembering the dangers is basic to investing in a business. Investing in a business does not prevent its owner from losing all of the money they have put in. Because of this, it is wise to spread out your investments rather than putting all your eggs in one basket. Having a safety net of low-yielding savings with guaranteed money is highly recommended. Consequently, investing a portion of your money in SMEs, life insurance, savings, natural resources, and mineral resources business implies allowing oneself the risk of losing on one side while ensuring that the gain is realized on the other side more than makes up for this loss. Chapter 3. Investing in Natural Resources, Mineral Resources. Sources of matter and energy that are monetarily available in the natural environment before they're changed by human action. A natural resource can be sustainable or renewable on a human scale, creature or plant biomass, water, or not, metallic assets, minerals, fossil energy assets, uranium. What is a natural resource? Natural resources are capabilities or parts of nature. These parts bring a financial advantage. Natural resources incorporate unrefined components and biodiversity as well as geothermal or wind and sun-powered energy. The latter is likewise alluded to as streaming assets. Natural resources are now and then additionally called regular natural assets. Nearly all that is accomplished or obtained in regular daily existence, whether purchasing a cell phone or a pair of jeans, eating a steak or driving a vehicle, are manufactured from materials being mined on land or in the water. These materials are called natural resources. This designation can be perceived as a sort of aggregate term for all normal, natural substances, methods for creation, and auxiliary materials. Strong, liquid, or gaseous mineral resources in or on the earth or the ocean are also called mineral resources. Some examples of mineral resources are diamonds, quartz, and gold. A few instances of mineral assets are jewels, quartz, gold, silver, and iron. Water would likewise squeeze into this definition, yet as indicated by the law, it's anything but a natural resource, however resource. Notwithstanding mineral resources, there are additionally natural assets. These are substances in light of plants or creatures, like wood, meat, calf skin, grain, and natural product. Oil, coal, and petroleum gas assume an exceptional part. Shaped from organic materials for a long time, they are mineral and natural assets. Furthermore, similar to every mineral asset, they are accessible in limited amounts and, while organic, can't be regrown. What natural resources are there? With mineral resources, further qualification is made between unrefined metallic substances and intriguing earth. Metallic, unrefined substances incorporate all metals or minerals from which metals are refined. Examples are iron ore, bauxite, aluminum, copper, ore, nickel, gold, silver, tin, zinc, lead, platinum, cobalt, coltan, tantalum ore. Natural resources include precious stones such as gold, diamonds, and crude oil. Resource types. The resource assigns the total amount of an existing ore in a given zone without considering the potential outcomes of present or future exploitation. We call starting resources the number of resources before their creation. According to the knowledge we have of a resource, it is feasible to classify it more precisely, definitively. Identified asset, resource whose area, type, quality, and amount are known. The distinguished assets can be productive, profitable, barely profitable, or unprofitable. Express the level of geological certainty. These assets can be qualified as measured, indicated, demonstrated, or inferred. Measured. The quantity is determined from measurements obtained from outcrops, channels, unearthing, or boreholes. The typology and the quality are determined from the after effects of definite samplings. The examination, inspecting, and estimation locales are adequately near one another. The topological qualities are adequately distinct, with the goal that the asset's size, shape, profundity, and mineral nature are deeply grounded. Indicated. Quantity, typology, and quality are determined from data like measured resources, yet assessment, inspecting, and estimation locales are all the more broadly separated or less adequately spaced. The degree of assurance, even lower than the measured resources, is sufficiently high to expect congruity between perception focuses. Demonstrated. Term enveloping measured resources and indicated resources. Inferred. Assessments depend on expected more central coherence than measured or indicated resources, for which there is geological proof. Tests or estimations do not affirm inferred resources. Unprofitable resource. Part of a recognized resource that doesn't meet the criteria for reserves and minor reserves. Undiscovered resource. Resource whose existence is just hypothesized, including deposits separate from recognized resources. Undiscovered resources can be hypothesized into deposits of a kind and area to such an extent that they might be profitable, marginally profitable, or unprofitable. Investing in the gold business. Investing in gold means choosing a safe haven, an intriguing option for enhancing and securing your savings. Gold has consistently played a significant part in financial systems, especially at the degree of national banks. As an individual, you can invest resources into gold through the organization. Presently, 62% of individuals think about gold as quite possibly the most secure interest amid economic and political instability. With the guidance of our specialists, find out how to get the best profit from your interests in the acquisition of gold coins and gold bars. To invest resources into gold, it is vital to comprehend the cost of gold and the elements that impact the cost of gold, its tax collection, and its dangers completely. One of the few luxuries that have remained in style throughout the years is gold. Gold is a symbol of dignity and prosperity. It is also formerly a type of legal money and has kept its worth despite adverse economic conditions such as a recession, currency devaluations, and the increase in precious metals. Investing in gold can turn your network into a millionaire, even multimillionaire, just in a twinkle of an eye. People purchase gold to keep their money's value. You can also resell gold for a higher price when you need money. Gold trading is a successful industry with great profits. One could launch their business from the convenience of their own house if they are familiar with the essentials. Various ways of getting into the gold business. There are several ways you might get engaged in the gold business. These are direct ownership. By storing them, you can purchase and get gold. The most frequent and well-liked method of investing in gold is to purchase it directly. In other words, you visit a jewelry store and pay cash for gold there. There are gold traders or jewelry sellers in major cities. The simplicity and directness of this approach are what make it so popular. You don't need to hire a financial manager or open a stock trading or CSCS account to manage your investments. Purchasing gold mutual funds. Gold mutual funds invest primarily in gold bullion or firms producing gold. There is a high return on investment since the gold industry is profitable. ETFs and mutual funds are comparable, but mutual funds are managed even more aggressively. The mutual fund's objective is to generate profits for its investors. A mutual fund that invests in gold securities such as ETFs, shares of gold firms, or tangible gold assets is known as a gold mutual fund. Mutual funds come in various forms, including open-ended and closed-ended mutual funds. Choose a reputable and well-known mutual fund supported by a sizable financial organization such as a bank. To assure dependability, you must confirm that the fund manager has an SEC license. The main benefit of investing in a gold mutual fund is that you can expect to outperform gold's market performance, making your dream of becoming a millionaire pass. Flipping gold. Purchasing it when the price is low and reselling it for a profit when the price goes up. Gold is a valuable physical resource whose worth can appreciate with time. Buying gold at a discount and then selling it at a higher price gives the individual flipping it a reasonable opportunity to make a huge profit. Launching a resale store. You can purchase secondhand worn gold jewelry from individuals and resell it as a reseller. A gold jewelry store is a profitable retail venture. You can start this business depending on how much money you have to invest. If you don't have enough money to launch the business, you might choose a specialty level. No matter how tiny your store is, attempt to attract clients and establish a reputation. You can choose a franchise to grow your business as well. Mining and selling of raw gold. Gold is extracted from the natural world through mining. The oldest way to get into the gold business is known as gold mining. Despite the hefty startup costs, gold mining is a very profitable business. Although it can be a very profitable business, gold mining is not without its difficulties. You must have a strong sense of determination and a passion for mining in order to mine gold successfully. This procedure can be difficult, but if carried out properly, it has the potential to result in great wealth and a better quality of life. How to begin gold mining. Finding the gold mines is the first thing you must accomplish. Contacting mining companies is the quickest way to locate them, and they will be able to give you information about the mines they are currently working in. Contacting mining firms is one of the best methods to get started. You'll need to begin mining once you've located some mines. Depending on how much cash you have available, you can either purchase the land or rent it. After you begin mining, it's crucial to consider the equipment you'll require. Consult a specialist with experience if you are unsure of the optimum type of equipment. Next, after your equipment is process of gold mining. Gold mining is pretty straightforward. Using a sluice box to separate the gold from the soil is one of the most common techniques. A watertight box with a sloping floor is known as a sluice box. The larger gold particles gather near the bottom of the sluice box because the box is lined with a riffle board. The earth needs to be dug up and placed in a sluice box to be mined. The sluice box will collect all the gold flecks while discarding the dirt. Due to their greater weight compared to the soil, the gold particles will fall to the bottom of the sluice box. The heavier gold particles will be produced by the riffle board lining the sluice box riffle board, leaving all of the dirt behind. The gold can then be exported with less stress and be ready for sale. What obstacles do you encounter? The cost of production, the lack of funding, and the absence of certification are the main barriers that prevent people from mining gold. You must conduct a thorough investigation before mining for gold. Recognize the sources of deposits and the funding required for your project. In terms of manufacturing costs, gold mining is an extremely expensive activity. Finding a large enough deposit might be very challenging and costly. It could be challenging for people to launch a business if they don't have enough money for the initial investment. Investment in the crude oil business. Raw oil emerges from good exploration. It is made out of hydrocarbon stores, and different natural materials can be refined into oil-based goods. For example, gasoline, diesel, petrochemicals like plastic, fertilizers. Oil is a fundamental and crucial component of the worldwide economy. It binds our routines and is broadly trailed by financial experts, businesses, and traders. Therefore, the price's development is significant. When oil prices rise, it directly reduces consumers' purchasing power due to the cost of gas, and indirectly raises the price of products derived from oil or utilized by businesses to make them. On the other hand, cheap oil benefits consumers' ability to make purchases. On a longer time scale, commodities frequently become more expensive as oil prices rise. It could impede economic progress by causing inflation and higher than anticipated interest rate increases. The availability of goods generally increases as oil prices fall. Due to the decreased danger of inflation and rising interest rates, this promotes economic growth. Low oil prices can also restrict production because producers may decide to halt new oil projects and cut back on existing ones. The overall supply of crude oil is finite and cannot be replenished because it is a non-renewable fossil fuel. Nearly half of the supply is produced in the United States, Saudi Arabia, and Russia from underground resources. Although fracking, which involves injecting high-pressure liquid into subsurface reservoirs, is a more recent process, drilling into underground or underwater reservoirs has been the main method of obtaining crude oil. Crude oil is extracted, refined, and processed into several goods, such as lubricant, diesel, asphalt, heating oil, kerosene, jet fuel, and gasoline consumers. Companies and governments all over the world then purchase these finished commodities for a variety of functions, including heating homes and buildings, moving people and things, and many more. Crude oil prices. The price of this commodity is determined by the supply of crude oil and the demand for its refined products, just like in any other market. According to Peter McNally, the worldwide sector lead for industrials, minerals, and energy at Third Bridge Group Limited, inventory, or the perception of inventory, is the primary factor influencing oil prices. Prices rise when inventories fall. Nevertheless, changes in demand can also affect oil prices. The COVID-19 pandemic's first lockdowns and a steep drop in demand for crude oil products also impacted oil prices. The price of oil futures contracts momentarily fell below zero for the first time. The principal market for trading crude oil is the futures market and one future. There are contracts for various months that specify the delivery, just like there are for other commodities that trade on the futures market. The futures contract with the shortest delivery month, which is also the most active, is referred to as the price of oil and represents the cost of 1 barrel. The West Texas Intermediate, WTI, the standard for the North American market, and Brent, the benchmark for the rest of the world, are the two main futures markets for crude oil. While the two markets tend to trend in the same direction, prices can change based on location. How can you trade crude oil? Although trading crude oil on the futures market is the most direct option, most individuals cannot afford it. Brokers will demand futures traders to pay a margin up front or a specific portion of the value of the trade, as in the case of all derivatives, investment contracts whose value is derived from an underlying asset. Additionally, traders who don't close their positions in crude oil futures contracts must be ready to accept physical delivery of the barrels, which is not only extremely unrealistic for most people, but is also prohibited by several brokers. Because of the erratic nature of oil prices, trading crude can be risky. It would help if you also comprehended other things, the basics, but you also need to be skilled in technical analysis. Fortunately, there are many better alternatives for oil-minded traders to access the energy market, according to Quaid. He suggests two approaches: purchasing individual shares of companies in the oil industry, or investing in exchange-traded funds, ETFs, that monitor this sector. Most individuals can invest in oil more easily and safely by purchasing stock in companies that will profit from fluctuations in oil prices. These companies frequently provide capital to investors in the form of dividends. Risks of investing in crude oil. Investing in crude oil comes with additional risks besides those connected with futures trading generally. Economic expansion. Oil price is sensitive to variations in the rate of global economic growth since it is essential to the operation of the international economy. Since there is a discretionary need for crude oil end products like gasoline, consumption might vary. As a result, any economic slowdown or recession in a big oil-consuming country, region, or sector of the world economy is likely to be followed by a significant decline in oil prices. Geographical concerns. Many nations most dependent on the crude oil economy are experiencing political unrest and conflict. As a result, these geopolitical concerns affect the price of oil as well as the supply of oil. Changes in the major oil-producing nations may impact the availability of oil worldwide. Russia's invasion of Ukraine in 2022 is only one example, as sanctions against Russia caused the price of oil to soar. The oil-related markets dynamics. Trading crude oil on the futures market has a high learning curve, and getting exposure to the commodity on the equity market isn't always the easiest way to do it. For instance, production-related problems that boost the price of crude oil aren't always helpful for the particular company that's directly impacted. Benefits of investing in crude oil. Purchasing crude oil has definite advantages. Diversification of holdings. Concentrate on diversification and make investments in diverse assets that don't all move in unison to reduce risks in your larger portfolio. When stock prices are falling while oil costs are rising, or vice versa, increasing your exposure to crude oil or energy stocks may help you balance your portfolio. Receive dividends. Dividends could be another advantage for investors who participate in the stock market to obtain exposure to crude oil through individual stocks or ETFs. Energy-related businesses are delivering dividends that are expanding faster than any other sector of the American stock market. The average dividend payments for these companies have climbed by more than 50% since 2018. Investors receive compensation while getting exposure to the crude oil market when prices rise. Chapter 4. Investment in coal business. For small populations in developing nations, charcoal is a cheap form of cooking. In these small towns, most residents cannot afford to use kerosene, gas, or even electric stoves when there is no electricity. And, as a result, This charcoal substitute accounts for more than 80% of all the energy needed to prepare food for households in Africa. Charcoal has a sizable market in Europe, America, and Asia, and its global value is still in the billions of dollars. Investors who want to invest in the energy sector now have a fantastic opportunity to make millions of dollars and become millionaires. For instance, 70% of the 60,000 metric tons of charcoal used annually in the UK is imported from Africa. A provider of charcoal that exports between 10,000 metric tons annually would make more than 2 million euros. What is charcoal? Burning wood in a low oxygen environment to eliminate unstable substances such as water, methane, hydrogen, and tar can take several days. The result is charcoal, which is pure carbon. Reasons for exporting charcoal. Charcoal export entails shipping charcoal from Congo, Kinshasa, to several international destinations. Data on charcoal exports. Charcoal sells for between $200 and $600 a ton on the world market. Some toothpaste contains charcoal. Occasionally, cosmetics will contain charcoal. Charcoal is a phenomenal exportable item from Congo, Kinshasa. Charcoal is utilized for preparing food in different structures. Whether you are the producer, if you buy directly from the source, and the final price agreed upon with the buyer, your margins on selling charcoal to foreign customers can range from 30% to over 100%. You don't need any money to start this business as a broker. Due to its extensive forest cover, it is assumed that the DRC has continuous availability of charcoal. Northeastern Congo. Kinshasa charcoal costs are determined in metric tons, and there are enormous quantities of charcoal available to purchase. How is charcoal created, and where is Kinshasa, Congo? Although some varieties, such as charcoal briquettes, are created from coconut shells, tropical timbers are typically used in the production of charcoal. The wood is burned during manufacture at extremely high temperatures without the presence of air. The term carbonization refers to this production process. Is it moral to invest in the export of charcoal? The claims regarding the fundamental ethical principles of the charcoal industry are true. However, entering the energy sector would result in significant deforestation, climate change, and other detrimental effects. Many Africans living in local communities would not be able to afford costly energy sources like kerosene and kerosene cooking gas to prepare their daily meals if charcoal were not offered in local marketplaces. Since 80% of consumers of charcoal goods are below the poverty line, they cannot be compelled to use things they cannot afford. Due to their bad circumstances, they are forced to use their cheap options. Opportunities for business in the export of charcoal. There are various business prospects in the charcoal sector. There are various ways to engage in this fantastic sector. However, there are three main core business opportunities in the charcoal sector. 1. Production of charcoal. It takes certain people who are knowledgeable in the field and not afraid to get their hands dirty to produce charcoal, which has historically been a delicate procedure. It takes a lot of labor to produce something. Trees must be felled, chopped, and burned at high temperatures. Since most exporters cannot participate in this laborious procedure, they rely entirely on the charcoal manufacturers who supply them with the product in large numbers but at extremely low costs. 2. Charcoal export and distribution. This is the most widely used business opportunity in the DRC, Africa, and the rest of the world. The industry is profitable due to the tens of thousands of metric tons of charcoal exported annually from Congo, Kinshasa. Here, local market vendors or significant exporters of charcoal products may make sales. Several conditions must be met before charcoal may be exported. For instance, the buyer's standards must be followed concerning the product's moisture content, fixed carbon, ash content, and many other factors. If the shipment is not up to par during the inspection by the buyer's representatives or the buyer himself, the entire shipment may be rejected. Additionally, packaging for charcoal that is being prepared for export must appeal to the buyer. They may come in small packages to make it simple for local customers to purchase what they need, or they may come in bulk packaging that ranges in size from 25 kilograms and up, which a shipping company will then place in containers that are prepared for shipping before sending them to a customer anywhere in the world. Starting a business in the export and distribution of charcoal goods might cost you anywhere from $800 to over $2,000 and eventually yield a great profit, making your dream of being a millionaire come true. 3. Charcoal machines. Appliances that help manufacture and use charcoal include charcoal burners and other devices. You can manufacture and sell charcoal stoves for about $8 or more per stove. For those who reside in the communities and rely mostly on charcoal as their source of cooking energy, these energy-efficient stoves make it easier for them to use charcoal. The types of charcoal you can export. Hardwood charcoal, the charcoal briquette, charcoal barbecue, sisha charcoal. Starting an export business for charcoal from Congo-Kinshasa to international buyers. 1. Register your export business. Creating a legitimate corporate entity is the first step in launching a charcoal export business. To begin, you must establish a limited liability business. with the Guichet Unique de Création d'Entreprise, GUCE, of Congo-Kinshasa before registering your business with the Congolese Council for the Promotion of Exports. 2. Locate producers and direct suppliers for exports. The next stage is to research on behalf of your clients on the direct charcoal manufacturers. However, this can be done before, during, or after registering your business with the necessary bodies. To receive the best pricing, it is typically advisable to establish direct contact with charcoal producers. It would take longer, cost more, and have a negative impact on your profit margins to use a proxy. 3. Establish appropriate corporate governance, operational procedures, and branding. Establishing a good corporate structure that is internationally recognizable is crucial, whether you do so before, during, or after registering and securing your customers. Create an international standard website, obtain a business address, and establish a company to make a business profile and offer a template for a business offer that you can edit and deliver to customers who want one. Find worldwide customers for your items after structuring your company to give them confidence in doing business with you. Can accomplish this by signing up on websites. 4. Market your goods abroad. You can start shipping the charcoal and wood to the buyer after making agreements with them, obtaining an irrevocable corporate purchase order, signing a sale and purchase agreement, etc. A free onboard, FOB, and a cost, insurance, and freight, CIF, basis are available for shipments. In contrast to FOB, which means you pay for the products and other costs up front until they reach the shipping point, CIF means you pay for everything, including insurance and delivery of the products to the buyer's chosen port of destination. Anyone who wishes to enter into the export of solid minerals into the DRC will profit from the export of charcoal. Your profit margins may be significantly higher or smaller, but they will still be significant, depending on how much the buyer needs. Starting a charcoal export company in Congo-Kinshasa is not only a means of breaking into the market, it's also a terrific place to start if you want to develop a long-term company that one day might, directly or indirectly, employ thousands of people. Investment in forest business. Forests are an essential natural resource that might be harvested and maintained responsibly to produce a variety of commodities with significant economic value. The most significant product obtained from forests is, by far, wood. Forests and trees are essential to the subsistence of people and animals in arid regions. They can provide numerous essential requirements of human communities, providing food, medicine, fuel wood, and fodder for livestock. Because of their economic importance, investing in forests can yield much profit. Here are different types of forest investment, but we discuss mainly the two main ones in which one can become a millionaire in the period of investment. Forest shares, direct investments in forests, forestry funds. Forest shares. A public limited company with a significant portion of its capital engaged in forestry or wood processing is said to have a forest share, a title securing a stake in the firm. The market value divided by the quantity of shares gives forestry shares their value. If the forest stock is traded openly, trading is rather simple. Direct investments in forests. On the other hand, direct forest investments in valuable woods can react to market fluctuations better by delaying harvesting. Because they continue to increase in size, height, and value, the trees are left in the forest until the harvest is profitable. Additionally, valuable wood has far smaller price volatility than the wood used in sawmills or pulp production. From an environmental standpoint, direct forest investments are advantageous because only investors may start the afforestation of new trees. On the other hand, investing in forestry stocks does not always entail growing new trees. Forestry funds. Direct investments or closed-end funds are the most popular types of forest investments. Closed forest funds are less individualized than direct investments, in which investors directly purchase one or more trees in certain locations and hand management over to a service provider. Investors in forestry funds are merely shareholders in a business that buys and reforests land in order to harvest timber. Investors profit from the sale of timber as shareholders. Therefore, if timber prices rise in the market, investors stand to gain more. As a result, traditional investments in commodities include forest funds, direct forest investments, and forest shares. The forest funds are mostly invested in monocultures that are generally only for the benefit of the investment corporation and its investors. Benefits of forest investments. The rising demand for wood as a raw material benefits forestry investment. There are fewer and fewer forested areas, and the wood supply is already insufficient to meet the demand, which means that timber prices will increase more in the future, ultimately benefiting all investors. Investing in forests can yield green profits if woodlands are properly managed or even planned to turn into permanent, nearly pristine forests. Investors obtain long-term wealth protection from inflation with forestry investments. The investor receives a profit from the exploitation of the forest massifs. It is possible to completely comprehend the market worth of forest estates by investing in forestry group. Future investment. As a material for construction and decoration, as biofuels made from wood waste, as kindling, as a sustainable energy source derived from endless natural resources, sun, wind, tide, geothermal energy, biomass, etc. How can an investor identify which forest investment companies are reputable? Being present in the market is a vital sign of a trustworthy supplier. It is more likely that it will continue to do so in the future the more successfully it has managed and replanted the forests and perhaps even paid investors the proceeds. It is also crucial to understand how openly a provider of timber investments operates. Does it release consolidated annual reports? Does it make calculations demonstrating how timber returns are generated available to the public? Is it possible to visit the forest areas and interact with the staff? These crucial signs can help you identify solid and trustworthy investment partners. Matters arising when buying a forest. Clearly state your objectives. Any investment demands you to be clear about your objectives and goals from the beginning. Is it a pure game investment in money? Are you seeking portfolio diversity, an alluring risk-return profile, a large cash flow contribution, or an investment where money is tethered to possessions whose worth rises due to the biological growth of trees independent of market cycles? Investing plan length. Do you want to earn money immediately? At the very least, fast? Or are you saving it for retirement? Alternatively, do you desire dependable long-term capital growth? You can choose a forest that will help you achieve your financial objectives. Reasons for natural resource investment. We can state that the global standard of living is rising, especially with the entry of new nations that want to consume, like the industrialized nations, which will boost the demand for raw materials and by extension for basic goods, firing the infrastructure for extraction. These infrastructures must be maintained and repaired with spare parts, etc. Emerging economies will require a tremendous quantity of natural resources to construct future cities. Many countries purchase commodities to ensure supplies or hedge against the risk associated with using fiat currencies, such as when governments buy gold. Fourth, according to these three reasons listed above, investing in natural resources, mineral resources, is a highly profitable business that yields an increase in profit and financial wealth. This investment can boost your chances of becoming a millionaire or multimillionaire within a couple of years.